Hi, I'm Dave Monty. Welcome to my video series, Everything Villages. It is March 2025, and I'm going to do a market update, and this one's going to be a little bit more detailed than most, so stay tuned. As always, a couple of housekeeping items. If you like this video, please hit like. If you like this channel, please subscribe. Both those actions help these videos reach more people, and I greatly appreciate it. Also, if you'd like my free 42-page guide, Buying and Selling a Home in the Villages, you can email me right here at davemontysales@gmail.com, and I'll send you out a copy. I also have a nifty cost of living calculator / budgeting tool that you can also email me right here at davemontysales@gmail.com, and I'll send you out a copy. All right. I also have other videos in here. Biggest Bang for Your Buck, where we talk about updating homes for buyers after they buy a house that needs a little bit of updating. We also will help listing clients update homes before they sell them, which is a huge advantage in this market. I have a cost of living calculator, which I mentioned, but there's some tutorials on my channel, understanding the two markets, pricing videos, homeowners insurance, tax bond. Basically, if you got a question about real estate, I think I pretty much answer in most of my videos. If you have questions that I don't necessarily cover, feel free to email me those questions, or you can leave a comment and I can maybe introduce one of those into a future video. All right. Overview of the market. New home sales continue to increase here in the villages, and it's having a kind of an effect on the resale market, in which it does. I'm going to show a slide that talks about that specifically. Homes that need updating, like we just talked about, are staying on the market much longer. Buyers know they have many more options now, and they're just waiting for one that is updated and fairly priced before they pull the trigger. They're not coming into the homes that are tired and saying, "Oh yeah, I really like this home, and let's update it." They're just waiting for an updated home to come along. Inventories are increasing rapidly, and we'll talk about why I believe that's going on as well. And we are starting to see more aggressive pricing by sellers. So those of you who've seen my videos before, months of inventory, you know what it is. It's probably the best indication as far as the health of the market. What you do is you take the number of homes that are currently on the market, divide it by how fast homes have been selling, and that gives you the number of months it would take to exhaust that inventory. I say a balanced market is 6 months, but around 4 months, it really started to shift over to a buyer's market. And I do believe we're in a strong buyer's market right now. Months of inventory, again, that last point was just a specific data point. Here's a graph that kind of shows it trending, and we do see a solid trending up. These little anomalies don't mean too much, from month to month, because there's not a million data points, so a few data points can skew numbers one way or the other. This is a trend line, which is a little bit better. It's an average of these numbers, and you can see it continues to tick up the months of inventory, which means it's either a supply issue, too much supply, and not enough demand. Okay, and we're going to talk about the demand side quite a bit. So last month was a record number of new listings or homes listed on the resale market. My guess, both on the MLS and on the VLS, probably even more so on the VLS, and we'll talk about that particular issue as well. Number of sales. Here's COVID. We had a large spike in sales, and it's been fairly consistent. Since we came out of COVID, it's just the number of sales. Now, this month we had many more sales than we did the previous month, but if I look year over year, we're down quite a bit. We're probably down maybe 30 homes a month sales, which doesn't sound like a lot, but that is a huge impact, because that's almost 15%, which is pretty big. Days to sell. When you have increased inventory and not increased demand, the homes are going to sit on the market longer, and they're going to continue to accumulate. But the days to sell the home have been increasing. It dropped this last month because we did have a little bit more of a busy month. In general, the days to sell have been increasing. If I were to trend line this up, it'd still be increasing. Right. Average days on market. Now, this is just, we're taking the average, we take the existing homes that are on the market today and average how long they've been on the market. you can see some trending here. I went back 10 years because I'm trying to figure out what might be causing this, and I think I figured it out a little bit. The new home sales have a huge impact on the resale market. Up in this area right here, you can see, homes were selling decently. Then, as you can see in this area right here, from about 2015 to 2016, you see inventory increasing on the resale market. I believe the reason that is because they were competing against new home sales. When they were building those, they were building in the still north of 44, along Morse Boulevard, as well as close to Brownwood. So you're trying to sell a home near Sumter Landing that is 8, 9, 10 years old, and you're trying to compete against a new home, and you don't really have a location advantage, and people gravitated towards the new homes here. Then it started to trend down, and trying to figure out why did inventories decrease, because they're still building new homes. Well, they started building new homes in the Finney area, and that includes the other villages. There's like 5 or 6 of them down there: Marsh Bend, McClure, DeSoto, Finney, Linden, and a couple of others. Okay, but when they started building, they had no promise of that area even connecting to the villages. So people took a little bit of a risk and bought down there with the promise that it was going to open to the traditional part of the villages. But it wasn't as desirable of a location. So I think the resales really filled in the gap there as they started to catch up in the newer areas. And I think in here, they started to, like you said, they started to connect through, and all of a sudden you see it level off on the new home sales. COVID hits. So right at the beginning of COVID, you see an increase of, at the beginning of COVID, you start seeing an increase of inventory. They took the restrictions off, and then all hell broke loose. All right. So we'll ignore that now. Now let's look. Now we have increased inventories again, and just a market increase here. This is fairly flat in here. In this time frame, they were building just north of the turnpike, but southeast of Sawgrass, a higher tax area, a little bit further from all the amenities in the villages. We're trying to compete against new homes on the resale market, but the location wasn't as good. Right here, they punch over the turnpike. So as soon as they punch over the turnpike, we started competing against new homes and the promise of Eastport. Still not as good of a location, and again, we'll talk about that impact, but in general, I think that's one of the reasons why we started to see an increase in inventory. There are other reasons, but if I'm just kind of tracing, when things were built, I think you can almost see it on this graph. Sales price. Now, here's what's interesting is that you have increased inventories, homes are staying on the market longer, you would expect the pricing to dive. Well, this is a lagging indicator. I do believe pricing is coming down based on my experience over the last couple of months here in the villages. Homes just are sitting much longer. Not as many people are buying. Probably averaging about 20% of what I did last year. I mean, that is a big difference between what I did last year and this year. When I say not 20% off, 20% of what I did last year to date. So we just, all of a sudden the numbers just dropped. But in general, you take a look at sales price and it's a lagging indicator, which means what we're seeing for price drops in the last 2 months actually hasn't hit here yet, because we're looking at homes that get sold, that went under contract, sat under contract for 5 to 6 weeks, and then closed, and then that's when we're going to see the sale price. So we are always a couple of months behind here, and I do believe this number is going to start to dip down. I believe there's a few things going on in what's going on. Some of it's national, but let's talk about the local situation first before we get into the national. Here are all my retirees who are going to buy in the villages in 2008, 2019, 20, 26, 20, 25. All right, so you get the idea. All these people are going to be buying in the villages eventually. During COVID, a lot of people bought early. They either retired early or they could work from home, so they ended up buying here and working remotely from their home here. A lot of people bought to hedge against how fast homes were increasing in pricing. They bought to hedge inflation. So when they were ready to retire, they could either sell their investment property or move into the investment property. So a lot of people did it early. And what does that mean? So they did it early and they did it early. Now I'm showing everyone, but I'm just doing this for illustration purposes. So just a good percentage of people bought early, and which would do this to the graph. There we see COVID. These people, we're now, guess where we are? We're in 2005. Okay? These people bought early, so they're not buying right now. So this is kind of the curve that I think, and I think we're right about there. I mean, this isn't exact. This is just illustrative purposes. So we are seeing a decrease in demand there. So other factors affecting, a lot of people are buying new right now. So they're buying new homes because they're beautiful. They've got great floor plans. They've got modern fixtures. It's just, nice and shiny. You look at a home that needs some updating versus a brand new home, and there's no comparison. New homes are selling at a record pace. The other things that I'm hearing from my buyers are we need to sell our home first up north. Depending on which market you're coming from, some people still have a hot market. Some people have a dead market, just depending on where you are. We got a lot of people saying they're still waiting for interest rates to come down. I've been hearing this a little bit more lately, uncertain about government-funded programs. Not necessarily they're going to cut anything, but are they going to cut jobs in Medicaid and Social Security? And will that affect the efficiency of these programs? Will I get my checks on time? So I've heard that a few times. And still nervous about inflation. There's a lot of uncertainty whether there are going to be tariffs, not going to be tariffs, how big those are going to be, and how it will impact inflation. So we got a lot of people just sitting on the sidelines waiting to see what happens here. Resale of brand new homes is another large factor. Many buyers are buying in the newer areas, and within the first year, right around their anniversary date, they're taking these brand new homes and putting them on the market and moving out of the villages. I'm not going to belabor why this is going on. I mean, it's the location arguably is almost lousy. Eventually, as the villages grows, you're going to have more conveniences down there like shopping and medical, et cetera. But right now, people are spending the majority of their time in their car if they want to go do anything within the villages. It doesn't affect everyone. Some people don't care. Some people are okay with waiting, a few years. They have time to ease into it. But still, a higher percentage of people than ever are turning around and selling their brand new homes. The reason I know this is going on, not only anecdotally, is that if you take a look at inventories on the MLS and the VLS, traditionally we've been neck and neck. Last year we were about 450. There were about 450 or 500 homes on the MLS about this time last year. This year we're about 700. We had a huge increase. They're at about 1,000. So how did they almost, really start pulling ahead? It wasn't because they're doing any better on selling of the homes. It's because when someone buys a new home and they turn around and sell it, they haven't been here long enough. They don't know a realtor. They tend to just call the person who sold them the home and say, hey, we want to get out of this. Let's put it back up on the market. So they tend to just go ahead and just automatically list it with the villages. And if you look at the villages maps, you can just see the plethora of resale homes down in the newer areas. The homes that need some updating are now competing against not only just new inventory, but the increased inventory from people turning around and selling it pretty quickly. And a majority of these people are not even just saying, hey, we don't like it down here, let's move north. Majority of people are going, we don't get the villages, and are moving out altogether. I've shown this slide a number of times, but I think the sellers are starting to get the memo here, okay? What's been going on, price drop, and the buyers are seeing the price drop and they think this. So a lot of my buyers right now are lowballing offers, and a lot of them are not being accepted. Sellers continue to, continue to put higher pricing on it. I'm starting to see, and I'm starting to do it with my listing clients, having a more realistic discussion about where pricing is going here. The average sales price per square foot is $236. If I take a look at the homes on the market, they're $253. That's a 7% difference. People who have their home on the market are looking at what they think they can get for the home versus what homes are actually going for. And here's the conversation that I've been having with my listing clients is that a market analysis is a lagging indicator. When we're looking at active homes that are on the market today, which probably set their price 2 months ago and are still at that price, I am looking at homes that sold in the last 3 months. The faster the market moves, the tighter you want that to be, but you'd still need to have a decent number of comps. But you're looking back about 3 months in a fast-moving market. In a flat market, that's not a big deal, okay? But what I'm going to do is I'm going to show you what happens in a down market and in an up market. Let's take a look at what happens in an up market, right? Here's my listing date, and I'm looking at homes in here that have sold over the last 3 months, gone pending, and are active. So technically, if I just by the math show this, my pricing is right there. I'm actually, the fair market value that I'm calculating is a month and a half old. In an up market, this is fine, right? When you're listing a home, I'm going to go ahead and I'm going to list a home here at fair market value. Okay. But what I was doing with my listing clients is I kind of knew this was going on. I just didn't make the switch quick enough in this market. But we would just price the high, even homes that needed a little bit of help. We were pricing above average. Homes that were very updated, we were pricing pretty high in the range. The opposite happens in a down market. Okay, here's my listing date. Pricing's coming down. Now this is for illustration purposes. It's not, it's not to scale. So the pricing isn't diving like that. Just as illustrated purposes. Listing date 3 months ago. So the fair market value I'm coming up with is right there, which is a month and a half old. I take that same range of homes I'm coming up with, and now if I look at my list date, I'm down in the lower end of the range of these homes. And that's a conversation I'm starting to have. If a home shows off the hook, I am putting it at average, if not just above average. I'm not putting it at the top end of the range anymore. If a home is a little bit below average, we're coming down into the lower end of the range because I'm a month and a half behind. I think more and more agents are starting to do this with their clients. As an example, I have a villa listed right now. I'm at fair market value all day long. I mean, we do the market analysis. Market analysis tells me this is fair market value for this home. It's been on the market. It's been shown quite a few times, still hasn't sold. And it shows very nicely, and it's turnkey. So, but it hasn't sold yet. About 2 months into that listing, another villa a couple streets over came up for sale. It is 300 square feet bigger. So if you're just at $250 a square foot, that's $75,000 difference right there on a market analysis. Arguably, this other villa had many more updates. I mean, it just showed very nicely, very open, one of the bigger floor plans. They listed it at the same exact price that my villa was listed at, and they sold it in 7 days. Now, I think they went way too aggressive, in my opinion. But here's the challenge. That now is going to start factoring into market analysis. If I use this sort of the same price per square foot on my listing, I'm $60,000, $70,000 less. And we're going to start seeing more and more of that. So when you see that, what ends up happening is you end up what I call chasing a down market. And I'm not even sure if this is a term. I think I may have overheard it at one point. But here's the pricing coming down, and I put it at fair market value, above fair market value, like we've been doing in the past. And then I go, it doesn't sell. Lower the price, but guess what? Fair market values come down. Lower the price, fair market value is coming down. What we're trying to do these days is, let's price it real close to what homes are selling for. Versus trying to get a little bit greedy and going into the higher end of the range. Okay. So market overview. All right, here's my summary. Record month of new home sales. So there's still increased demand. Homes that need updating are staying on the market much longer. So the buyers are waiting for the homes that are updated. Now here's the challenge. Those are still few and far between. Homes that have been updated and are priced correctly are selling really quickly. Inventories are increasing rapidly. Like I said, last year about 450 homes on the MLS. This year about 700. The VLS is increasing even more rapidly due to that factor where a lot of people are just turning around and selling their brand new homes very quickly. And we are starting to see more aggressive pricing. If you'd like a copy of my free 42-page guide, Buying and Selling Home in the Villages, you can email me right here at davemontysales@gmail.com. Or if you would like a copy of my nifty cost of living /budgeting tool, you can also email me right there and I'll send you out your copy. Well, I hope you found this video informative, and I hope to see you around the villages. Take care.